OCR decision today due 2 p.m. from the Reserve Bank. What'll it be? Economists are almost evenly split on whether it's going to be 25 or 50 basis point cut. ANZ reckons it's pretty much a coin toss at this point. Sharon Zollner, the chief economist, is with us from ANZ, alongside Kelly Eckhold from Westpac. Good morning.
Good morning.
Good morning.
Good to have you both here. I want to start with a quick 25-50. What do we need and what will we get? Kelly?
Well, I think we need 50. I think the data that's come since August suggests that. And I think we're going to get it as well this time.
Okay. Sharon, what about you?
I actually don't think either of those things are particularly clear at the moment. That's what you get around turning points. Interest rates have come down a very long way. The economy's starting to respond, but it's still early days. It's just very uncertain. So there's more than one way to skin a cat, essentially. So in that light, whether it's 25 or 50 doesn't really matter as long as they get the big picture right and have settings where they need to be by the end of the year. So that's really the reason why we think they'll plump for 25 rather than 50, just to give them that maximum optionality. But as Kelly said, the data would easily justify a 50-point cut as well. Wouldn't surprise me if the committee's divided too.
Yeah, okay. So if, like you say, Sharon, we need to get to a certain point by the end of the year, Kelly, what is that point?
Well, I think we're probably heading towards 2.25% or maybe 2%, depending on how things happen. Not really in this meeting, but before the last one of the year. Pretty long Christmas break that we have here. The job here, I think, of the MPC is to get rates to where they need to be so that when we have this long Christmas trading period, next meeting's not until February next year, this economy is doing what the Reserve Bank wants it to do, which is to basically start growing again. Sharon,
we've had problems with that, obviously, and with that nzherald report yesterday didn't paint a great picture. So you said it doesn't really matter which of the two that they choose, it's more about the track. Would it not help to give a big, bold signal to people? We're like a flock of sheep without a shepherd at the moment. We need someone to come in and say, right, it's all going to be okay. Let's go 50 just for the headline even and worry about the rest later.
I certainly think that is something they will consider. Does this economy just really need a really good shove to get it going? And there were a couple of members of the committee who wanted to do that in the last meeting for precisely that reason. But then the last thing you want to do as the Reserve Bank is also just sort of stop-start, flip-flop. That sort of thing isn't helpful either. So there's that tension is ever present. And I think different members of the committee will have different views on what the smartest strategy is for that reason.
Kelly, if we get, you said 2%, maybe close to 2%, what would that mean for a mortgage rate? Because at the moment, I think the best we're getting is like 4.5%, just under 4.5%, just over 4.5%.
Yeah, the market's got priced just under 2.25% for where rates ultimately bottom out. So I'd say there's a decent chance that they do price something towards 2% if they get the 50-point cut today. And that, I think, would see another 20-odd points off mortgage rates, I think, consistent with that.
So getting us down to what, 4.25%?
4.25%, 4.5%, somewhere in that kind of range, so a bit lower than where we are now. I think the risk is that if the market has to back up a bit because they only get 25, then some of the banks will be thinking, well, that 4.9% rate, that might not be very sustainable.
So we could actually see, if they go with 25 today, we could see that rate that people have been holding off locking in because they're expecting things to get even better. If they do go smaller, Sharon, it's possible that bank rate could go back up?
Unlikely it would go back up, but it may not go down much more. But there's risks with 50 as well, because if the data then starts to improve, then the market could bring forward their pricing of when hikes are going to come. And so if they started building those in sooner next year, then actually that could undo the actual benefit of the bigger cut now. Because really the floating rate, not many people are on floating really. Many more people are on, say, the 1-year rate. And so the bigger question is, where do people think the official cash rate will be 1 year from now? So if you cut more now, then the market may actually decide it's not going to be there for very long. So it's really quite difficult, and they do absolutely consider the likely market response as part of their decision making.
Yeah. What do we do about the wider issue that we've had in this country? Well, and not just ours, but the timing, the Reserve Bank always seeming to play catch up rather than being proactive, rather than leading. Kelly, have we solved that problem? How do we solve that problem?
I think we've all been chasing our tails a bit this year. And the Reserve Bank moved pretty aggressively at the end of last year and at the start of this year. You might remember a string of 50-point cuts, for example. But in the last 6 months, it's been a bit tougher, hasn't it? I mean, we were hoping the economy would bounce back. It didn't. The key now, I think, is to get in front of this, I think. I mean, I don't think the option for interest rates to stay at around 2.75% should be worth very much to the MPC at this juncture. If it really becomes something that's necessary, then yeah, they can take some easing back middle of next year. But right now, it's much more likely they're going to have to take rates to 2.25 rather than 2.75. So why aren't they cutting 50 points today?
Appreciate your time this morning, guys. Thanks so much for being with me. That's Kelly Eckhold, Westpac Chief Economist, and Sharon Zollner, ANZ's Chief Economist. And we'll find out at 2 o'clock what they've decided.